Hello, this is the trade site Forex market preview and international economic data roadmap for the week beginning Sunday, the 2nd of September, 2018, ending Friday the 7th. And keep in mind, Monday the 3rd is a U.S. bank holiday, Labor Day here in the U.S. So there'll be no trade calls Sunday night going into Monday. It's a 4-day week for us from a Forex perspective. Here's a look at the dollar index daily chart. You know, pretty flat week overall. We've been in summer doldrums. This was the worst of it. But honestly, when you look at this, since June, it's been really bad. We had one pop in the early August and came back. And other than that, the dollar index has basically been in a 1 point range, which is horrible. So let's go through the major daily chart on the pairs. Euro dollar, just the inverse of the dollar index. Pound dollar has a little more range over the last few months. Obviously, been better trading action there. Here's the Aussie dollar to new lows, even though it had a 13 buy signal that it bounced off of about 3 weeks ago, approaching the risk line of that here now. Euro yen has been up over the last month, but came back on Friday. Pound dollar, pound yen, a little more action there as well. And the New Zealand dollar making new lows. All right, or near new lows. Okay, let's look at the intra-week action. So we've got 30-minute candles on these charts. The euro dollar high to low for the week, only about 140 pips. Monday there was a move up. Tuesday, Wednesday, Thursday was flat. Friday there was a move down. Pound dollar high to low for the week, 180 pips or so. And again, a big piece of that was the spike up on Wednesday. So other than that, it was not very tradable. Again, we're half size. We had a couple little winners, a couple little losers. That's what you expect in the summer. There's not a lot else to do when the markets are just flat and everybody's gone. But sometime after Labor Day, doesn't mean next Tuesday, but sometime after Labor Day, things do tend to pick up. And at that point, when we start to see some consistent, better ranges, we will go to full size again on our trade for our traders, and we'll let you know when that's the case. All right. In terms of economic data coming out this week, again, Sunday, AIG Manufacturing Index out of Australia, Overseas Trade Index out of New Zealand, capital spending out of Japan with final manufacturing PMI there, retail sales out of Australia, along with company operating profits. That's a new one. Haven't heard of that. CAC and manufacturing PMI out of China. Going into Monday, remember that's a U.S. bank holiday. Commodity prices out of Australia, retail sales here in the U.S. I'm sorry, out of Switzerland. Spanish manufacturing PMI, Swiss manufacturing PMI. Same with Italy, France, Germany, broad European sector, and then the U.K. Canada also on bank holiday, by the way. Monday night, monetary base out of Japan, current account rate announcement out of Australia. Spanish unemployment change out of Europe, Swiss CPI, UK construction PMI, Europe PMI, manufacturing PMI out of Canada, final manufacturing PMI and ISM manufacturing PMI out of the US, along with construction spending, ISM manufacturing prices, IBD tip economic optimism number here in the US at some point on Tuesday as well, GDT price index out of New Zealand, total vehicle sales here in the US. Australia's got their AIG services index. New Zealand's got the ANZ commodity prices. Australia's got their GDP for the second quarter. Caxton Services PMI out of China, 10-year bond auction out of Japan, Spanish services, Italian, French, all the final services PMI numbers out of the various European countries and the broad European sector. Canada and the U.S. both do their trade balance on Wednesday. That's one of our big three each month. So even though we'll still be half size anyways, because I doubt we'll be out of summer doldrums within a day or two, we would be less than half size then with that trade balance number. Bank of Canada does their rate announcement at 10 a.m. Eastern time on Wednesday. Australian trade balance that night. GDP out of Switzerland. German factory orders, Spanish 10-year bond auction, French 10-year bond auction, challenger job cuts here in the U.S., the ADP non-farm employment change here in the U.S., building permits out of Canada, revised non-farm productivity out of the U.S., and there are weekly initial and continuing jobless claims numbers. Those are at 8:30 a.m. Eastern time on Thursday. Final services PMI here in the U.S., and then our ISM non-manufacturing PMI, factory orders, natty gas, crude oil inventory is a day late because of the Monday holiday, but still coming out. Japan's household spending and average cash earnings, home loans out of Australia, trade balance out of China. Leading indicators out of Japan, the unemployment rate out of Switzerland. Now remember, these are all September now. We're in September all month, all week. German industrial production and trade balance, French budget balance, industrial production and trade balance. Foreign currency reserves out of Switzerland, Halifax HPI out of the UK, Italian retail sales, consumer inflation expectations out of the UK, revised GDP for the second quarter out of Europe, then here in the US and in Canada, the unemployment rate. So that's another one of our big three. So I don't think we'll be going full size this week anyways, but with Wednesday and Friday having trade balance and unemployment rate respectively, we would be half size ahead of those. no matter what, so you'd be less than half size in this situation. And at some point, we will go back to full size, but that's our job, is to keep you informed as to when to do that. Charts, as usual, brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple of weeks. Have a great trade.